It's always better to buy once you have bears that are stuck below. So someone sold below 4, they got a bad entry bar 5, and what do they do if they're short below 4 or the close? They want price to come back to let them out. Hi everyone, hope you're doing well. My name's Tim Fairweather. I'll be taking us through the first Brooks Price Action European Trading Room. Al and the team have been running a live trading room for a number of years. So it's been in the works for quite a while to get a Euro session, so thanks for your patience with that. So for those who might be tuning in, may or may not be familiar with how we run the trading room, we have a Brooks Trading Course Discord, and then on that Discord we've got a channel called Trading Room Chat. If you put some questions in there, I'll do my best to answer them. You can see a bit of the team in there already. G'day FJ, hiya Frank, Mazier, g'day Naked, Raulo, Charascuro, William, hi Matt, Andy. Thanks to the team and Vikram. So what I'll try and do today, we'll try and take a look at the German market, the DAX, and the English market, the FTSE. Now, bearing in mind that it's very easy for me to flick through tabs and flick through instruments, it might not be as comfortable to watch it that way. So what I might do is, depending on which market's moving, we might just switch to one. But I'd like to just go through a couple of things beforehand in terms of trading the DAX. So I'm just going to, so I put a post on my blog on Zen Trading Tech earlier about the FTSE and the DAX. I just wanted to go through a couple of things because it's a couple of different ways you can trade it. Okay, so FTSE is on the London Stock Exchange, the DAX is on etc. on the German Stock Exchange. Now, you have the index and then you have the futures. So the futures is one way you can trade that index. FTSE is through Intercontinental, ICE, and DAX is through Eurex. So you'll probably need the different market datas to access them. For example, I trade through NinjaTrader, so I need to get the market data for the futures exchanges I want to trade. One of the good things about FTSE is that it's a little bit more reasonable to trade when you're just building your account. And DAX also has a couple of options. So you have the full, the mini, and the micro in terms of the futures. Now, for other traders that have access to CFDs, you can also trade the FTSE 100, UK 100, or some CFDs still call it German 30, but it's the German 40, and that will allow you to trade, 10 cents a point, $1 a point, that kind of thing. So it gives you a chance to trade in a way that's going to match your account. So hopefully that's useful. I've written that there on the blog anyway, so you can go and take a look. Have we got many people in the room who are not familiar with Dr. Brooks's work? Judging by some of the names I can see, it looks like it's a familiar crowd. So I'll just kick off and we'll take a look. So we're at the 20th of May, so we've got a couple of weeks till the end of the month. At the moment, we're at an all-time high. We're around 24,000. This has been a target that's been on the cards for a while. You can see the market went close to the target and then pulled back, which is quite common. We had a bull channel. Now, most bull channels do not get a bull breakout. This channel is one half of a trading range, and it tends to build the other half of the trading range afterwards. This has got a bull breakout and follow through pullback, and it's attempting to break out of this channel. Where's a possible measured move target? Sometimes it's a measured move of that channel that'll put a target, 24,500, maybe somewhere up that area. But also this can fail in, 3 to 5 bars. So it can still have bull bar, strong bear reversal bar, follow through back into this channel. So, but at the moment, very bullish on the German market. Oh, we've got some Aussies in there. Fantastic. Hi, Garrett. Weekly charts. 1, 2, 3, 4, 5, 6, 7 bull bars in a row. We're breaking above the prior high, and we had a doji last week. So it's an indecision bar. This is very strong. It's always in long, but on the last leg, we take that last leg here with 3 pushes up, we went below that low. To me, that puts the market into a trading range, and so this becomes a little bit more difficult on the long-term trade. In trends, you don't want the pullbacks to go lower than 50% typically, so lower than 2/3. This has actually broken all those swing points. So at some point here, some traders would call it always in long, looking for a pullback to sell. But higher time frame above the 20, above the 200, more likely to be a pullback and become a flag. So what do you do here on the weekly chart? Because this bar is not a strong close above a prior high, this bar is important on the weekly chart. Is this going to be a breakout and follow through, meaning this pullback's likely to be a minor reversal and lead to a new high? If this bar is more like this one, then probably more like sideways in a channel, and we might not get too far above that. When you have a strong sell climax like this, there are bears who sell here and sell higher, betting this gap is going to close. So to understand how that works, here is a wedge. We have a strong reversal attempt. We get to a new high. Traders sell and they sell higher, betting that that gap is going to close. We eventually close that gap. So traders are still going to do that. Would I recommend doing it on the weekly chart? No, I wouldn't, but I'm still going to pay attention to what other traders are doing. So. Yeah, so we'll talk about the trading hours. It's a good question, always in loss, and I'll get to that now. So on TradingView, sorry, I have started, so we can get rid of that. You got 3 sessions. You've got RTH. In this case, RTH would be the 24-hour chart. Sorry, would be the Globex. So this includes all the trading across 24 hours, okay? Etc. is the RTH chart, so that's the time frame I'm going to be using to trade. But you can also pick up the Frankfurt trading hours because the futures market actually has a pre-open market, and sometimes traders can use that. Often it can set up measured moves and things like that on the open. So you do have 3 options. I would highly encourage you to pick the one, do some research on one of them that makes sense to you, as opposed to trying to fit all 3 in at the same time. It's going to be easy to get confused. For example, on ES, it took me a few years before I could have an overnight and an RTH chart on the same screen. That would just send me a little bit crazy. Strong spike and channel. We've got a bit of a small pullback bull trend at the moment on the daily chart. What happens in a small pullback bull trend? Well, none of the bars look too strong, and traders end up buying opposite bars. So instead of selling below that bear bar, traders are buying. Every time there's a pause, traders are buying below, betting that the first strong reversal is going to fail. Is this 3 legs up? 1, pause, 2, pause, 3. Yeah, it makes sense. But at the same time, bears don't have a reversal bar on daily chart. And we're up in the top part of this channel. Is yesterday a good signal bar? Well, it's a bull outside bar with a big tail, so it's not a great buy above the bar. It's probably going to find buyers at the close or into the range of this bar. We might even pull back into this range. Yeah, thanks, Mazier. That's yeah, that's well said. He actually said it shorter than I did, so we're going to use his his explanation. So this is the RTH chart on the daily. So we had a strong buy signal bar, but it's an outside bar. So often what happens with outside bars, so not quite an outside bar, but we had a strong gap down and a reversal attempt. So traders want to see what's above that bar before they buy. So over the last couple of days, we had a strong buy signal. We went above, bad follow through. Traders ended up buying that close. Okay, so we're probably on that buy signal, and I think we've actually hit that target already, 24,110. We're going to take a look. Okay, so that's just looking at the 1R from those, 1R from the daily. So if I switch this time frame now, so those traders potentially have their target, and we're going to see what they're going to do at that target. Will they hold for 2R? Will they not? That's what we're going to see today. But we're on a daily buy signal, and we're on a spike and channel bull trend. RTH chart, very strong bull spike here, always in long, 1, 2, 3, 4, 5, 6, 7, 8, 9 bull bars. So even if a trader buys late, they're betting that we're going to go and run the bear stop before this stop gets taken out. We're up at a prior high. And yesterday's price action that we're going to take a look at had a bit of a tricky open. But if you kept the high time frame in mind, then you would have avoided selling low. And if you were still trading in the last couple of hours, then you had a bull trend. So if you take a look at this RTH chart and then take a look at the regular chart, it tells the same story. A strong spike, pull back, sideways, and then a move up. If you're not able to do this without kind of getting dizzy, confused, upset, frustrated, it's just something you got to practice until you can kind of squish those time zones together and they make sense. So you can see I've got the breakout point, which is around about 24,000. Really strong bull spike. 1, 2, 3, 4, 5, 6 bear bars in a row. This is what we might call bear surprise. This is too many bear bars for this to be a strong bull trend. So I think probability is this needs a second leg sideways to down. You can argue from that inside bar, it's already 2 legs, but I'm not in a rush to buy a high one here. I think the bears will get something. It'll be interesting today to see, do we overlap this breakout point or do we leave a gap? Why is that important if we leave a gap? Does that matter? Yeah, nice, FJ. It's a sign of strength. So in a trading range environment, you go to a new low, the gaps close. Go above, gaps close. New low, gaps close. So this keeps the market in a trading range environment and encourages limit order traders to fade breakouts. But the opposite is true in a strongly trending environment. This gap is open. This pullback leaves a very large gap. And if this gap is open, a lot of traders will not fade above this high. So what happens to that high? Once we go to that new high, there are less scalpers looking to fade. Some might anyway, because it's second entry short, bad idea, the wedge failed and we went up. And then we've got more gaps. And so every time there's another gap, when we get to this new high, look what happens. Not as much resistance. It's not until these gaps close, like here, strong move down, closing all these gaps, the traders decide to sell above highs again. So if you're in a strong trend, I think it's a common beginner trader error to fade strong trends. What you're trying to do is this, but you need gaps to close first. Okay, nice. Let's have a look into yesterday's session. Well, we've got a couple of measured move. We've got that 1R on the daily there. We've got breakout probably of this range above as well. I'm not sure if we hit that. I'm going to put one more above, which is the measured move of yesterday's range there. I'll just put trading range. So if the whole of yesterday's range gets 1R, if just this trading range does, and that's the daily traders, I think that'll give us some stuff for DAX. I'm going to switch the 60-minute chart to the Globex here. I'll keep the 15-minute chart here for the open. One of the advantages of using the overnight is just to see the bars before we come into the open. It can often prevent you taking too many low probability trades coming into the session. So FTSE also in a bull trend. This is also a small pullback bull trend. Got this air pocket to the moving average. Traders waiting for pullbacks, and we're also on a buy signal on FTSE. Is there a correlation between instruments? I don't think there is. I think you can spend time and find correlations, but in general, I treat every instrument totally different. So just because they're setting up similar signals doesn't mean one can't do the total opposite. There are days where you have a strong bull trend in FTSE and a strong bear trend in DAX. So similar situation, you've got a strong daily signal bar that's at 1R. Will they exit that position for a scalp because it's a late leg, or will they hold? We go sideways for more up. So similar situation. So FTSE, we actually ran quite a few swing points. So one way is to say, here's a 50% pullback to go higher. I think that's actually low probability at the moment. I'll put it there anyway. So we've got a higher time frame. We've got pullback up there. This might have actually put the market into a trading range. So the pullback can be much deeper in FTSE, I think. Mazia is saying you can use, yeah, so the UKX is the actual index, but what are you using to place your trades? So that's the actual index. So if you're going to mark up on one instrument and then trade on a different one, just bear in mind that they're not going to line up perfectly. So for DAX, I'm trading the FDAX. So even if I'm going to trade FDXM or FDXS, or I was going to trade the CFDs, I'm going to run it all off this chart. Yeah, right. Okay, just for analysis. Yeah, nice. Okay, so we've got 11 minutes till kickoff. A lot more trading range price action yesterday for FTSE. So we'll see whether this comes back to the breakout point for a flag, or we're going to have more of a trading range. So Red October is saying, how much of the overnight trading should I consider during market hours? Yeah, it's a fair question. So some traders will do this a different way. They'll say, I'll find a tick chart. Okay, so they'll find charts that use a certain amount of ticks to look at the overnight price action. For me, I'm just looking at the move that's coming into the open. For example, here, that's a lot of bear bars. So it means I'm less likely to buy above this bar here on DAX, because this probably should get a second leg sideways. This whole piece needs a second leg, but so we might have to go sideways on the open. But I'm using the 60-minute, I'm using the 15-minute. I'm not taking a lot of levels from the overnight chart. It's mostly just for the open. So that's how I use it. How you use it in your trading strategy, something you got to research. So for DAX, a good bit of homework is to look at these 3 sessions, regular, etc., and Frankfurt, and then build, just do a little bit of a study on it. So for example, hang on, how can I do that? So you can do a bit of a study and say, okay, I want to look at all 3 time frames on the open. Which trades would I have taken? Which ones wouldn't I have taken? Okay, so you go through and then build a bit of a model for the open this way. That's one way you can approach it. Because what's going to happen for sure is that if you have 2 different sets of trading hours, you're going to have a signal on one and not a signal on the other. And how do you deal with that? Check news. Hi, Jigs. Oh, we got a Kiwi. Awesome. Good to have you, mates. Is it better to trade Europe? Look, I struggled trading Asia session. I thought it's quite an advanced session to trade. That was just my personal view. And the US was really late. So when I was in Sydney, I would wake up early to trade the close of the US session. But yeah, I think if you want to practice trade Euro, that was about 6 p.m. my time. So I'd come home from work and then try and trade for a few hours. NB, yeah, you just, the market data is more expensive than other ones. It's just a cost doing business. So I've got the market data on my Ninja Trader. I don't have it on TradingView because I don't actually trade off TradingView. So I've got might not have the delay on it. Yeah, there's actually not a lot of costs in trading, like in terms of margins, and that's so the data, the software, security, internet access, a desk. There's not a lot of actual costs apart from mistakes. So there's very low startup costs, I think, but people mistake that for easy to do. Yeah, coffee. You need your espresso machines and whatnot. Yeah, well, every course. Well, I did about 10 courses. They're all about $1,000. They're always, $800 to $1,500 each. So ours was the cheapest, funnily enough. So I met a guy in a gym here who runs a hedge fund, and he makes all his traders do Al's course, Brooks Price Action Trading course, and then we were talking about, you know, learning different systems, and he reckons that every trader there has done about 10 different courses before they found something that suited them. So I thought that was funny, and I kind of counted back. I said, yeah, I've done 10. Forex course, moving average crossover course, some like daily hammer bar course, some divergence course, something about trading the open, that's 5. One with a whole bunch of correlations with other markets, 6. Some kind of sniper thing. Yeah, there's a lot of them. So. Recommendations, yeah, just take your time going through the course, going through the videos. I think better just to take one chapter at a time, get recordings of the trading view, of the trading room, and then just work through that concept. It just takes time for it all to plug in a little bit. Well, FDAX is off the exchange, so there shouldn't be a spread. Just the comms, no? Well, the CFD, you could argue the spread is cheaper, but I would argue the CFD is less accurate. So you have to pay for that. I think so. It's always a trade-off, eh? Okay, so let's have a look at. Okay, so up here, the average bar range that I'm calculating up here, you can use ATR if you want. I'm just using average bar range, which excludes gaps. So the average range is about 300 points at the moment. Let's just switch it to the 24-hour session and just see if that changes. Okay, so 250, 260 at the moment. So in terms of a swing, so Al says a swing is 40% of the average day's range. Okay, so 80, 90 points. And then a scalp is about 10%. Okay, so 20, 25 points. I don't actually trade that way in terms of point counting, but I think that's some good numbers to have. Does that help? How do they differ in their behavior? I reckon they're exactly the same. I reckon FTSE and ES is like, you just can't pick a difference. Whereas I can see a difference between, say, NAS and ES and Dow and ES, in my personal opinion. I haven't done like a research on it or anything, so. Okay, the volume should be good. That's good, and we're going to kick off in a little bit. That beeps for me in case I'm answering questions and doing stuff. Just remind me of bars about to close. Okay, so we've got a gap up, 70 points. So we hit this 1R on the daily chart overnight. So we might need to go and hit that again. Daily chart is sideways to up. So just because we're at an all-time high doesn't mean you suddenly just start selling. A useful tool, if you find you have a bias for buying or selling, is to be able to invert the chart. Okay, on TradingView, you can just click invert. This is a mirror chart in TradingView. Okay, so you get to do that. So strong gap down, that means if we come back, it's probably a pullback for more down on this chart. So breakout, pullback, probably for more. I think the open is a good time to observe the first bar. Does it start at its low and just plow higher? The moment we went up, we've come down. So there's some trading range behavior so far in bar one. The moment the stop is below here, so this is going to give us an idea of where traders think the range is. So we said on the open, 3, 4, 5, 6 bear bars in a row, bad high one. Okay, so that's where the high one is. So far traders are selling it. On the open, I think traders are waiting to see breakout and follow through. They're looking to see consecutive bars. I'm always trying to work out, is this going to be a trend from the open or a trading range open? Most of the time it's a trading range, but when you have a trend from the open, like ES yesterday, even if you're expecting a trading range, after 3 or 4 bars in the same direction, you've got to be able to change your perspective. Okay, so first bar of the day, looks like a big bear bar, essentially closing on its low. Because it's a gap up, the bear bar to me is always a pullback and not a sell signal. Okay, so bar one, trading range bar, tail below. So it's going to reduce the probability of a sell below. Someone's asking, yeah, so I trade full time. The phrase when I got home from work was when I was talking about trading in Sydney many years ago. Just got messages here. Yeah, because learning trading in Sydney was difficult. You've either got to trade the Asia session, which I think is quite challenging, or trade late. So if a trader sold the close of one, looking to close the gap with yesterday's high, that's their 1R. So at the moment, even though one's a big bear bar, there's more buyers than sellers at its low. If your target was yesterday's close, selling here is the 1R, or selling here is the swing down, but actually selling below that bar, you would have a upside down risk reward. I'm currently flat. I think wait and see something more information. Can the bears get consecutive bear bars on the open? It's going to increase the probability of a second leg sideways to down. This is a very strong bull leg on the 60-minute chart. So the bears need to work really hard to undo all this. They need to trigger a buy signal, go below it. trigger another buy signal, go below it, a high 2 that fails. I need to close a breakout point. I need to get strong closes below the moving average and follow through. So we're talking about the different kinds of trading hours. If you're trading all of the overnight chart, you get all of this price action. If you want to look at the Frankfurt, so the pre-market open, we're back down to the pre-market low. But for me, I prefer to trade the RTH based off the underlying of whatever I'm trading. So I give more weight to the action that happens during that, that instrument exchange RTH. But trading's cool like that. You can come up with your own system, your own time frames, do your own research, and then find it that way. So bad follow through bar 1 makes sense with a gap up and a tail. So 2's a high 1, but at the moment it's very small. So I'm going to wait and see what happens on 2. Does the high 1 trigger? Anyone that's sold below 1 doesn't want this kind of bull bar as an entry bar. We've got consecutive bars on FTSE, but overlapping small bodies. I'd like to see a stronger breakout. Because the higher time frames are in strong trends, the opens can often have a brief bear move that is the low of the day. We'll see how that plays out. So if you take a look at this daily chart, how many bull bars have tails below their lows? Here, 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 here. This one shaved, not here, 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 here. So every one of those bull bars had a brief sell-off before it created a new high and close. That's what we call an edge. If 3's a big bull bar, can you buy? I think we're overlapping. We've still, I mean, the stop is still down here. So I don't know whether there's enough information to take a 60% trade. So if the bulls can get consecutive bull bars, you'll start to get more bulls looking to buy. They're still going to use the wide stop down here, I would have thought. I'll mostly talk about stop entry trades. For my own trading, if I'm going to use limit order trades or scalping, I want a bar to trigger before I trade in that direction. So I have to decide, are we always in long or short or in a trading range? This is a gap up. This is a bull breakout. So for me, we're always in long. That means I'm looking to buy or buy below something as opposed to selling below something. And that framework means that I will miss a quick bear spike off the open on a gap up, but I'm okay with it. Every time you add a rule to your trading strategy, you filter out trades. Okay, so let's see this first 15-minute bar. Looks like we're going to have a bear bar. So we went below 1, found buyers, went above 2, found sellers. Can the bulls get a second reversal on 4, or can the bears get a better close? Because no one's taken a stop entry yet and made money, I'm going to wait and see whether they can. So let's see what happens to someone that sells below 3. On the open, usually gets between 2 and 5 reversals. So far, we've had a gap up reverse. That's 1, maybe 2 here. You generally then get a range which forms your opening range for breakout. So yesterday, big bull bar, no follow through, double top, double bottom, and then we measured move up. Okay, so breaking below 3. So magnet for bears, yesterday's close. If you're a 15-minute bear, let's say you sold the close, you're looking for 23,963. Hi, MSH. So I use the ABR for scalp size. So, which is at the moment about 23 points, but about 20 points, I think, with regular volatility. If we look at the VIX, where's the VIX? So you look at the VIX at the moment. So we're back down into the kind of sub 20 range. It's kind of the regular zone. So up here, it was ridiculous. Always good to keep an eye on the VIX for trade size. So bear's trying to close this gap. It's an okay scalp. I'm currently flat. One thing I don't want to do is be short when the market forms one of those little tails on the daily chart. So I'll give up a successful short trade to do that. Well, VIX is a measure of volatility, and that's going to show how big the bars are. So that's going to change your scalp size. For example, at the moment, the average bar size is 24 points. But, a few weeks ago, you couldn't take a trade for, less than 60 points a bar, 80 points, 100 points. So it basically prices you out of the trade. If you can't find a way to trade small enough, then you just have to watch it. Well, that's how I would use it. Okay, so consecutive bear bars. So you have more bears looking to sell, maybe sell pullbacks. All of these bear bars have got tails below them at the moment, so I'm waiting to see whether there's new bear momentum. We've got 24,000 big round number just here. Yeah, I've got an AVR indicator. Just go to Zen Trading Tech. It's all these indicators are free. Just search for bar range, and then it'll just adjust. Because I would often take big losses on the open because, by the time I got into the trade, I know this is a dumb thing to say, but I wouldn't realize how expensive that stock was. So you come up with a process, which means you go, okay, well, the bars are 20 points. I probably need a stop that's 2 bars away. So what's my size? I've got FTSE on the other screen here. So we're just still in this tight trading range in this bear channel. Can this be an endless pullback? Yeah, so endless pullback starts to get consecutive bear bars below the moving average and then breaks down this way. But at the moment, tight range. High NB, have I got other rules? Mate, I've got heaps of rules. Yeah, well, I often miss moves on the open, but it doesn't stress me out because I trade for 3 to 4 hours and I've got enough setups to to take 3, 5, 10 trades. So on a day like yesterday on ES, you take a trade in here, yes, no, but then I had a short trade above 14, a long trade 20, long trade 25, long trade 30. So you know what I mean? Even if I don't do anything here, I'm busy in here, and then I'm done. Other traders will just be busy here and then have targets. So got to find a style that suits you. Okay, so bulls try again for second entry long. It's probably going to be a reasonable swing buy. Swing means 40% chance. It means small risk and larger reward. So you have to pay for the probability that way. I think the bulls would prefer a smaller bar. Other traders saw that 3 worked and they want to pull back to sell the 3 close or the 3 low. So they're hoping for 1, 2, and a third leg down. Okay, the bull's trying to get a reversal signal. I have to see how this closes. Okay, so small tail. So you might have other bulls waiting to see if it goes above. So you've got bears selling for second leg sideways to down. You've got bulls looking for a swing. Do we need to test lower, or is 5 enough? This is Al's price action encyclopedia. It's basically his homework for the past 4 decades. So if you look at gaps up, 4 common outcomes: breakout, pull back for a couple of legs, double bottom for a swing up. Gap up bear bar for a double top, high of the day. Gap up, high 1, high 2, high 3, pull back to the moving average, wedge top. So out of these, the most common swing is sideways to up. I think that's the most important part of that slide. Generally with a gap up, expectation is, I think it's about 60% chance of a swing up in the first 1 to 2 hours. Five wasn't a good enough close for me to do anything, so I'm going to wait and see 6. It's always better to buy once you have bears that are stuck below. So someone sold below 4, they got a bad entry bar 5, and what do they do if they're short below 4 or the close? They want price to come back to let them out. But if 6 is good follow through, then we want them to panic out, for example. Hi, Aaron. I use a thing called timer.fit/play. Hang on, let me just, it's just like a free, this thing. Stop for the bulls is still down here. Right? Stop for the bears above 1. So we're kind of in this middle of this zone. We're about to have our second 15-minute bar as well. So bulls want to be above the 3 close. FTSE, we're in a tight range still. So one of my rules is I don't scale into trades on the open, and this is the reason. The range of the day is going to be way bigger than this, and I don't want to be scaling into the wrong direction. So I prefer to take a loss and get back in, rather than, oh, I'll just buy here, I'll just buy lower, and then have another spike, and then you have basically derailed the whole day's profit. Easy to take big losses on the open when the volatility is large, and you have to spend the rest of the day trying to play catch up. Okay, looks like the bears have got another sell signal, but we opened above the close immediately. Okay, that's a pretty large gap. So if you sell 4 and I got an entry bar like 5, I get out. If you waited to sell 3, you need 6 to trigger to stay into that trade. So it's consecutive bear bars on the 15-minute chart. That's good for bears. are we going to get a wedge pullback to the moving average, perhaps? So for this channel here to turn into an endless pullback, it needs consecutive bars below the moving average, good looking bars for breakout and follow through for a second leg down. So we got this bit right. That was a bad high one. The first pullback from this is likely to get sold. So that's an example of using the overnight chart to set up how you trade in the first hour. So FTSE is trying to break out of this channel, but we haven't had consecutive bull bars. Just too much overlap for me to take a stop entry. Stop entry is buying one tick above a bull bar or selling one tick below a bear bar. So because a stop entry is betting on a breakout. Okay, limit order entry is betting that the breakout's going to fail. So if you bear that in mind, I think that'll help filter out some trades. So if you sold on a stop below 6, you're betting this is going to be the start of a breakout. And if you bought, okay, because the other side of a stop entry is a limit order entry, someone who's buying below 6, buying and scaling and lower, betting these gaps are going to close. Can 7 be a follow-through bear bar, or is it going to be a bad entry bar like 5? So 7, not a strong reversal bar for the bulls, also bad entry bar on 6. Still sideways. Because the higher time frame context is up, because the gap is up, because yesterday was an always in long tight bull channel, I'll give 5% to the bulls. I just don't have an entry yet. What else do other traders follow on the Euro session? Because I can look at DAX at FTSE, I can look at oil as well. I've just got to be mindful that if we jump back and forth too much, we might, we'll start missing trades. Yeah, okay, CL, yeah. There's a fine line between jumping through charts to find trades and just having no patience. My best days are usually I pick an instrument and I stay with it. Why don't you trade currencies? I do. I just can't also trade currencies while we're doing DAX. But I prefer indices. Just find the price action a little bit more straightforward to structure trades. Yeah, just one or two. Most of the time, just one. If you're jumping between too many instruments, you might need more setups. So you probably just need to find something that makes sense to you. We have bears trying to get second entry short, but the same thing. We've got overlapping. So I'll put an alert. And we'll come back. So first 8 bars, we've only had one decent bull bar, a couple of bull dojis. Can the bulls get something? So if you sold 3 or 4, you can still be short with a stop above 1, hoping for a gap close, hoping 1 to be the high of the day. Bar 1 generally has a 20% chance of being high or low of the day. You could be in a swing by maybe 5. I didn't like the close of 5, but so another sell signal 8, bear bar closing on its low. It's closing at basically the same price as 6. So far, difficult for stop entry traders. Can 9 be the follow through for the bears? Bulls don't have a signal above, probably buying below. Small gap, close, small gap, close. Big gap stayed open. Small gap, few attempts to close. That was the low of the day. Hi, Leon, buying below 5. Well, if you're buying below 5, you need a place to put your stop. So I think anyone that's buying below 5 is probably going to stop, 2 bar ranges away down here. So alternatively, you can wait and see what happens to the bar that goes below 5 before you put that order there. I'm going to wait because 8's a reversal bar. I usually pull that limit order. Moving average just below yesterday's close. Moving average now above yesterday's close. Let's see if the bears can do it. Okay. Nice. Bears trying to close the gap to close of yesterday, breakout point. It's a third leg down. 1, 2, 3. So bulls never got a strong signal. Nice. So if you sold that 15-minute bar, you're looking for 962, or sold under 3, looking for low of 102. Could you have used a tighter stop for below 8? Nice. So you got 9 as a breakout bar for the bears, testing yesterday's low. Sorry, testing yesterday's close rather, testing the moving average. 9 probably good enough for a second leg sideways to down. You've now got 3 bear bars on the 15-minute chart. So okay to be short, no buy signal for the bulls yet, but could be 3 legs down. You can see over the past 2 days, we've basically had a bear bar, a strong bull bar, and now we're testing the top of that bear bar. Where are the bulls this morning? I tried on 2, they tried on 5. So we had a second entry short 7, but a lot of overlap. Now back down to the low of this channel. If today's going to be a bear trend all day, we've got gap up. So 20% of the time you get all day is a bear channel selling pullbacks to the moving average. Here's a very strong spike that reversed, and the more common strong spike and then sideways. So it'll be interesting to see what happens at this moving average. So 910 probably good enough for another leg. So you got to break out and follow through 910. So reasonable to expect a pullback. Bulls want this to be the low of the day, 3 legs down, but they're going to need something pretty significant, 11, 12. So far you've got gaps to the 8 low, to the 5 low. Because it's 3 consecutive bear bars on the 15-minute chart, I think bulls are going to need to do, probably need 2 reversals here. We'll have to see what this is like. So okay to be short. You can be short below 8, short below 5, short the 9 close. It really just depends on whether daily traders come in here. Hi, OX, is it reasonable to take the stop sell below 8? Up here? Do you mean on a test or do you mean 9? Yeah, I would wait because it's at the moving average and it's at yesterday's close. So if it breaks below, you've got a chance to sell it. Traders that were short here through this tight trading range got their gap close. Yeah, because yesterday's a good looking bull bar. So I want to see if daily bulls show up here. So small pullback bull trend, what's going to happen at this close? Are they going to buy here or say, nah, maybe later, maybe 50%, maybe below? That's what we're going to see. The great thing about looking at a higher time frame chart like the daily or the 60-minute is it's going to become pretty obvious in 5 bars whether that happened, right? So you can see on my chart I've got green numbers for every 15-minute bar and red numbers for every 60-minute bar. But it's a really good research little study to do. See how you can use a higher time frame to take 5-minute trades. So bull's trying again to get a swing entry, but 3 bear bars down. Do you have to get out of your short? Some traders will get out of the short a tick above or a scalp size above. Other traders will be looking at this first reversal to fail. I think there's too much momentum down to buy above anything. So I think better to be short. I'm still short on 9, so I'll see what happens here. Okay, looks like an inside bar 11. Is 11 a swing buy? I don't think so. It's similar to 5. Yeah, it's a second attempt. But I think it's probability. That means if 12 becomes a really good entry bar, that will become a magnet, that price. So far, bulls buying the close of 11. Can the bulls close that gap to the 5 low? I don't want that becoming a measuring gap. Okay, so that gap's closed. So that buy on 5, I'm trying to think who was asking about that. Was that UOX? So traders putting a stop down here, buying 1 bar range lower, and now they're back to break even. Or you don't take the high buy, you buy below and lower. So they're just it's betting on a failed breakout, basically. So far, good entry bar for the bulls on 12. Coming up to the close of the first hour. So it's going to be a bear bar. Bulls want to put as much of a tail on it as possible. I'll probably get out of my short at break even if 12's going to close like this. Is 11 going to be the low of the day, or is this going to get a second leg sideways to down for double bottom? Let's see what the close is like on 12. Okay, so consecutive bull bars. $15-minute chart is sideways. Not a great buy above, but maybe below 12, below 11. See on this second leg down what happens. So short below 5 on 9. I sold the breakout point to get back to the 9 low out of the short. And we'll see if a small position below 12 will make sense. Let's see. So FTSE, we're trying to break out of this opening range, basically a double top and a double bottom. So it's breakout mode, but 11, 12 looking good for a potential long setup. G'day, JC. 3 legs down. Yep, 1, 2, 3. But I thought this leg had a little bit more momentum, so expecting some kind of sideways is reasonable. Is this a new breakout for a new leg count? Well, the bears need to do more below the moving average. So same thing as before, because it's a strong bull day, this is a bull breakout and we're testing the breakout point. On FTSE, would you consider the day's range a triangle? Yeah, it's breakout mode. It's got a double top and a double bottom. So you really want to break out in a gap, or you're taking a shot that this is going to be the low of the day. So same thing again on the open. You know this range is going to expand. So rather than, I think some traders kind of endlessly scale into positions on the open, better just exit and then try and catch the range into the new direction. I think that's a better strategy. So bears see breakout and a pullback, lower 5. So bears have got a second leg on 13. It's like the minimum. Bulls need to close this body gap. So currently they've got a gap here. Trying to get a second entry long for the moving average, wedge bottom, depending on how you count it. Soren, on that indicator, there's lots of custom options. I think blue might be urgency. You might need to just look at that code. There's a post on my blog about it as well. I think I explain it a bit more. If I've got time, I'll go, I'll chat through it later. Or you can just send me a message on Discord. So we had a bit of a spike sideways, spike sideways. Bulls really need a really good reversal bar here, which they don't have. So your bulls buying below things, you've got limit order bulls making money, you've got stop entry bears making money, limit order bears selling above things. Thanks, Chris. Glad you enjoy it. Can that be a measuring gap? Can the bulls go above that bar, or are the bears going to push down further and trigger this 60-minute bar? We're squeezing the volatility in here, so we're either going to break out up or down. It's a lot more exciting than studying charts. Awesome, mate. I'm glad. It's I think it's great. I mean, I learned a lot from Al's sessions over the years, so I think it really helps put the material in place. Okay, so bulls still trying to get a bottom here. They really need a better signal bar to buy above. If you're a bear and you see this spike and you think, okay, well, 13 is a low one short with a stop above there and your target's here. You've got 3 legs down, you've got a gap. On the encyclopedia, oh, no, that's not it. So we've had 1, 2, 3, and we're in this zone here, I think. We might not be, we might just crash down, something like this, but that's one possibility. We're not that, we're not that, we're not that. We haven't had a spike. How do I put dotted lines on the chart? I'm just in the settings, I think here, style. I should probably do a trading view video. I get a lot of trading view questions. Maybe I should do that one. What's going on the list? +1. Okay, nice. It's still on the bears to lose it, I think. FTSE is looking more bullish, but we're still in the range of 1. So bulls need a new high. They took out a swing low. It's real-time FDAX. The market data for TradingView is not too expensive. Oh, it's probably similar to Ninja Trader, actually. It's probably like $30 or something, or not sure what currencies that is. That 30 euros or. If the bulls can't do anything here and there's another sell signal, bears can take it over again. They want 15 to be a buy signal for a high 2 at the moving average. 20, yeah, so it's 30 euro. Yep, that sounds about right. So will this 15-minute bar be an inside bar? So if you're a bear, you see this is a low 1, looking for a low 2 for continuation. If you're a bull, you see it as a wedge pullback to yesterday's close. So 15, reasonable buy signal, I think. It doesn't close above 14, but it's another pair of bull bars. I think bull's trying to swing possible low of the day. What's the percentage? 40, 50% maybe. Okay, so triggering the buy signal on 15. If I was short and I see pairs of signals above my entry price, I'd usually exit. Some bears might scale in. But on the open, that's why I talk a lot about opening patterns. So bulls need to close this gap, which I've got there. Okay, so far 16, nice entry bar for the high 215. First stop to any bull bars that triggered up here. Probably 5 high. Let's see. Testing the 8 low again. I'll just get rid of that gap. Now this gap's closed. This gap is still open. One of the problems the bears have on a gap up when you're above the 20 and the 200 is it often is a deeper pullback. That's why I was saying I often miss the bear move to try and see if I can get a bull swing. I mean, this bull swing can also roll over and fail, but then we'll have a trading range and then we can switch to trading range price action. We've broken out in FTSE, but I'm long DAX, so I just have to watch this. Good looking entry bar 16, shaved bottom, which means the moment 15 closed, that was the high 2 at support. So you got bears exiting, so we should get a couple legs sideways to up. An entry at the 12 low, you know, basically just fading this low one. I thought that was a weak low one. And then 15 close. Yeah, long from the 12 close and from above 15. So somewhere at the moving average here. Okay, this bar is getting pretty big, so we'll see whether we go sideways afterwards. Can we get above the 8th high? Oh, nice, Matt. Thanks for jumping in. Good to see you. So bulls need to get above that 8 high. The bar's becoming very large. So big bar 16, good entry bar. Some traders might scalp out because they saw it was, you know, it's immediate 2R. It's up to you if you're swing trading or you're scalping. We're on the swing buy from 15. So I think we got some things right. We had a gap up, waiting for a bull signal bar, that failed. Bear's got a 3rd leg down. 3 legs to support, and then better not to take the low one. Turn into a second entry buy. Bulls need to get above the 8 high, which is the bear swing point. Run those stops. Although, you know, if you're short, I think getting out above 15, a second entry in the opposite direction, that's where Al, I think, would say to shut it down. But of course, you're open to keeping a stop there. Bears that are short here might become bulls, depending on what this does here. Nice. Nice, that's what we want. I took half off at the 8 high, and I'll keep my other half on. My stop's below 14 now. So bull's got a breakout follow through 16, 17 if it closes here. So after a wedge bottom, you expect a couple legs sideways to up. We'll get rid of those. So a bit of a slow start for me. I had a late sell during line. I had to get out on 13. I switched to long below 12. So what happens if 15 is not a bull bar and you get a new bear breakout? Then I've closed my short trade and then taken a small loss, and then I'm stuck in basically a late leg. Yeah, and B, I think so. 4 consecutive bull bars, so still always in long. But your stop's far away. Your stop's probably below 16, 14, 15, 16. So do we think this is likely to be a big bull day or a big bear day? Well, we've got a wedge on the open and lots of bear bars. This looks like a leg in a trading range. So we're probably going to get the same thing here. I had this 1R target, or I have this 1R target up here, but we hit that on the overnight. I thought maybe we'll have a chance to hit it during the RTH. I think bears got stopped out on 8. Sorry, got stopped out on 17 if they had their stop above 8. So a pullback and another buy signal would be a high 1 buy. So FTSE had the consecutive bull bars, but I had to make a call which one I traded. FTSE obviously a bit cleaner. You get that with hindsight, hey? Good looking signal bar on the 15-minute chart. The long FTSE, you've got a 2R target, 87. It's a bull micro channel, probably going to find buyers below 17 or somewhere in this gap. Hi Red Hat, why get out of that short? Yeah, so I sold late, right? Because I was waiting for this here. And that's the problem when you're seeing bear bars waiting for a reversal that doesn't appear, is that you trap yourself out of that trade. I thought 8 was a good signal. It took off. And so I sold small below 5, hoping we close the gap. And then when we followed through, I thought maybe we'll get a second leg sideways to down. Then consecutive bull bars at support and at yesterday's close. Yesterday was a buy signal in a bull trend. And so I said, this is where I think daily bulls might be interested. So I thought I'll get out as opposed to fade them. But you run the risk that then keeps going down, so you get out of a good trade. So there's no like foolproof method. You just got to deal with whatever decision you make. My biggest mistake, I think, was always blaming like institutions and smart money, and it was always someone else's fault. But you can take ownership for your own mistakes. It becomes much faster to get better at trading, I think. It seems obvious to say it, but it's everyone else's fault. It's the instos, it's the brokers, it's the charting platforms, 24,000, big round number. So will we oscillate around it? What do you do on 18? Bear bar closing on its low. Some traders might get out one tick below or a scalp below. I've still got half my position on. I'd like to add it back on a high 1 if I can. Okay, 18, bear inside bar closing near its low. So 15-minute chart, even though it's a big tail, this is still a strong breakout, so should get a second leg sideways to up. But from where is the question? Bulls don't want 18 to trigger. Hi OX, could you restate the logic for the swing long? Yeah, so I'm just taking the doctor's orders. Now, if you look at a lot of gap ups, so go and find a lot of gap ups, get a pen and paper, and write these down: double bottom, double top, wedge bottom, wedge top. And go through and do your own tally of how often they happen. So on a gap up, the odds are, and Al's got them here, they see 60% chance of a swing up in the first hour. So when we had, so I'm looking at these, knowing that 3 of these go up first before they go down, and only the double top goes down. So the double top needs a really good sell signal. Basically just needs to trap bulls. 4 bull bars, if traders are long, they get stopped out, swing down. So that's the basis on the open. Okay, so when we were here, the question is it going to go up from here, or is it going to test here first? We got halfway there, 5's not a good buy signal. 6 is even worse. So there's a chance for bears to close that gap. But now we play that game again. Is here going to be a reversal? That's one attempt. And now we've got a second attempt. So that was the logic. All of that could have failed. This could have been a big bear bar and could have just been a bear trend all day. And I'd be forced to chase it on the stream. Anyone who entered early would have a big profit. So I take context from yesterday, take context from the daily chart, take context from the open, and then just have a shot at a swing. If that's too many conditions or that doesn't suit your personality, then you just come up with another strategy on the open. Yeah, multiple contexts. I think in general, if you just look at bars, your hit rate would be around about 60%. And, that's over multiple sessions, multiple days. But if you can add context, you can start closing some of those losses a little bit earlier. You can try and swing more. I think some traders just use context. If you're trading the 15-minute chart, you've got a strong bull breakout, so you're expecting a second leg up. And now you've got 1, pull back, 2, or inside bar. So there's at least 2 legs there testing a breakout point. So there was a scalp on the 15-minute chart here, but then you probably had to get out there or there. So 18 bear bars, 18 bear bar, so bad high 1 above 18. Where's the strong bull continuation? Is this going to be a big bull spike or is this going to be trading range? If I get a second bear bar, I'll probably close the other half. Let's see. Hi, Pavel. Yeah, so that's what I was just talking about context. I think you can just trade on context. I'm sure a lot of traders do. Maybe I'm not quite good enough to do that yet. But like some of the better traders, they just have a feeling. They just use intuition. If you get a chance to listen to Tom Hugard, Trader Tom, he's got such strong intuition. He says, I feel like I want to be long here. 3 bars before it takes off long. So yeah, absolutely. And so I think that intuition can develop. So, how do we develop it to get to that stage? I think the tricky part with trading with intuition is where does your stop go? How do you keep it? Keep that entry similar. So here I've got 4 bull bars. I'm in a bull micro channel. So my stop should be below that micro channel. So from a price action perspective, I think it's a bit easier to manage. So 19 high 1, if it's going to be a trend, then 20 should take off. If it's going to be a trading range, 19 will fail. Yeah, and that's what you're going to go on back test. That's it. I think a good way to back test is to print out a lot of charts. Gives you a little bit of a break from the monitor, How often does a signal work? How often does it fail? How often does the failure lead to a second trade? For example, 4 bear bars should get a second leg down, right? But it doesn't. And then you either get stopped out somewhere above the high, or you get 2 bull bars against you, you exit. Okay, but if you switch to long somewhere in here, you made it all back plus. So if you're looking at something like micro channels or 4 consecutive bars, let's say, how do you know when to switch? You say, okay, well, this is 4 bear bars, this is counter trend, these are the 2 moving averages. You get some kind of nuances for it. That's it, mate. That's the other cost, the coffee machine and the printer. I think I keep the little printer shop around the corner alive. Like I could just print it out here, but he never has any customers in him, so I go and print out a couple hundred pages of charts. He should have put the print shop next to a uni, but it's just in the middle of the burbs, so. So far, no buyers above 19. Still always in long. Still haven't done a day's range. Okay, so we've only done 100 points. I think this still needs a second leg up. Oh, nice one, Leon. Oh, Tom's on tomorrow. Awesome. I think because he spoke at the Orlando seminar, which was awesome. Hopefully he'll come back again. Okay, so consecutive bull bars. So can the bull still get this second leg? Okay to be long. Bears, you don't have a sell signal yet, so I think bears got stopped out here. Probably let go of a second entry short here. Well, I can't take it because I'm long anyway, but if a second entry sets up against me, I'll use it to exit. So bulls need 21 to go above 17. Some might hug the stop up. There's another great speaker at Orlando called Ali Moin Afshari. He's a hedge fund trader and a huge fan of ours. He talked about volatility, expansion, and contraction. And he pointed out something pretty cool. So when we learn trading, we're long and then we see sideways. And the first thing we do is panic and close because we think, oh no, it's going to reverse. But he was talking about doing studies on what happens after volatility contraction. Well, you get expansion. Now, if you always exit, you're basically saying the expansion has to be down. But if you look at trends, so volatility, expansion, and then contraction, and then expansion again, what we call leg 1, leg 2, A, B, C, D, breakout, pause, second leg. And so he was saying, if this is an area you're always getting out, then you've got potential to increase your profits on those wins. But also, if you're flat and you didn't trade in that second leg, there's no reversal signal, then you've got a way to get back in. Okay, can the bulls get up to the one high? We're back to the open. Well, that's a good sign. Yeah, I thought that was interesting about volatility because I could never hold any trades. As soon as it went sideways, I'm like, oh no, it's going to reverse. It's just hard programmed in. So test it. You can either close the trade and open a trade on a demo account, or close part and then just see what happens to that part. Okay, so it looks like bulls are going to get consecutive 15-minute bars. Probably 1, 2, probably needs a third leg up. It's a bit climactic. It moves quickly and then sideways, up sideways, down sideways. Targets if you're a bull, open of the day, high of the day. If you buy above 15, your 2-hour target's 44. If you bought the close of 15, you just hit 2-hour target. I'll use the stop entry targets. Rightly or wrongly, because I think this is a reversal. Al changed his system of moving the arrows to mark entries, but I think this is the system he uses. So you're long on 16. 15 is a signal. FTSE, so FTSE had 2 strong legs. Maybe it needs a couple of legs sideways to down, but same thing, spike, sideways, spike, sideways. So it probably needs another leg. One exercise I think is really valuable, or certainly it helped me a lot in the past, and it still does, is to, once you've marked up all your trades for the week, just get a pen and paper and write down continuation or reversal, so C or R, and go and have a look at your hit rate based on those. What I found is that I had a 70 to 80% hit rate on continuation trades and like a 10 or 20% hit rate on reversals. Now that's a problem, because unless I'm holding those reversals for 3, 4, 5, 6 to 1, that's not going to work out. Stupidly as well, I was taking way more reversal trades, so there was a math problem there. So if that's you, then spend the next week avoiding all reversals. See what happens. It's looking more and more like a trading range day. I think still always in long. I think still sideways to up. So far the gap is down here. Does everyone actually mark up their trades? Is that what people do? I hated doing it because it was like, 15 losses. Marking them up was like, why am I doing this? But it's like the best thing you can do, I think. Particularly if it's a small pullback bull trend all day and all you did was sell and take losses. Yeah. Give it a go for it doesn't take very long. You'll be surprised how often the same mistake gets made. I found I had about 7 or 8 repetitive mistakes. Not waiting for a breakout, too many trades in the first couple of bars, trading counter trends, big bar, entering during a big bar. I had just a few that I kept repeating, and you just work on one of them. So, okay, if I see a big bar, I do nothing. Or if I'm going to enter, I wait for a bar to close and place the order on the chart, that kind of stuff. If we're always in long now, okay, don't sell. Even if the sell's fantastic, just say, no, okay, I'm not doing any reversals. Yeah, chiaroscuro. Yeah, absolutely. Put on a PowerPoint. If you get Tom's got a great book, Best Loser Wins, and he's got this funny chapter. He talks about his book of horrors, like a PowerPoint of all horrendous trades. That's a brilliant idea. I was like, that's a great idea. I've done the same thing. Like you just need to go, yes, I can trade well. I can also be the worst. Okay, so inside bar 22. So we're having trouble breaking above the open here. So if I get a second reversal, I'll get out of my long. And I might have to get back in. We'll see. Oh, yeah, you do that? Yeah, fantastic. It's a brilliant idea, Fitz. It's like, I wanted to get as far away as possible from them, but it doesn't help. So it's 2R from a buy the close 15. It's tricky. I think if you're long, the bear bars are sell to exit, but if I was flat, I don't know what I'd sell there. Or you just rely on your stop either below 18 or lower and go for a walk. Yeah, I think so, Peter. Looks like a breakout. So spike, pullback. So this is the low of the channel, so it's the test target. So spike, pullback, and then channel. Similar to this, we had a strong spike. So market's fractal, so we pull back, but then you go up in what's this? Is this acute? What's a sharp, tighter angle? Flatter angle. That's a simple word. So retesting the buy on 20. A high red, yeah, so the reversal we're getting out. So usually if I'm long, I'll sit through the first reversal, but not the second. All right, unless the first one's like just crazy strong and it's, you know, it's like, okay, that my original premise for the strong breakouts failed. But once there's a second entry short, I'll usually exit below that second entry short. I mean, if it then goes up higher, well, I'm out of it, so. But in strong trends, like here, you get a second reversal, there's one, or there's one, because we went below, there's two, doesn't trigger. So if you had an exit below that, you're still in a trading range, 1, 2, and then you're out while it goes sideways. So good to have exit criteria, I think, for your trades. So consecutive bear bars, still hovering around the open. Okay, so I think I'll just get out below 23. If it triggers, if not, I'll stay in. Bears still don't have a sell signal. So the trouble with limit order trading, I think, is you say, okay, we're in the top third of a trading range. If I sell, put a stop there. I've got a 1R target, I've got a 2R target. But this sell can sometimes go up here and go up here. So you need a way to manage it, a way to get out. Often selling in a trading range only goes to the middle. So your profit target's actually very small and your risk is really large. So spike, pause, leg 1, spike, pause. This is leg 2. Do you count from here? 1, 2, 3. I'm going to count from here. Will it take me out? Let's see. Leon's saying short again below 18. We didn't go below 18. Or you mean if it goes below 18, you'd sell there? I'm not going to, just because of the momentum up. If I want to be short late in a bull channel, I want to be short high as possible. And that you often get that. So you get, by the time the short sets up, it's too low. So you're in a bull spike, we're going up in a channel. Suddenly you get a sell signal, but it's low now. You want to sell back up in the top of the range. So see how it went all the way back up to the top of that range to sell from. But difficult trade to take, because by the time you want to sell here, you think, oh no, the bull trend's resuming. So not easy. Trading a stop to 18 or 19. Yeah, sure. That's the inside bar somewhere here. Yeah, Red, I think, yeah, bar 23 is the second one. That's one. That's two. You might count it differently to me, so. I feel like we need one more leg up. That's my intuition. So if you were short here and you took a loss, you had a chance to switch. So you take a loss, you get stopped out. Now you have a buy signal, breakout, follow through, pull back where you took that loss. So your target's up here, 24,080 to get your loss back. And if you traded double size, then you'll be back with a profit. Maybe you take it from the low one, spike, pullback, low 113. But nice. So high 124. We just had the close of the 60-minute chart as well. So we've got basically a inside bull bar. I think if we break out of this, there's a good chance we'll come back to this point. But at the moment, it's like we're still going higher. This volatility thing, same thing. Spike, pause, looking for a second spike. Yeah, Red, so I dragged my stop up to below 23 to take me out, but never triggered. So that's nice. But once again, you take that strategy. Okay, it seems simple, but there are days where you have a channel where it will constantly take you out. You know, it will just channels that are a bit broader. They'll just constantly just keep taking you out. So you can basically lose buying in a bull trend. So there's no like, you know, no, what's the word? Shortcuts? That's not the word. There's no perfect rules. It's always a trade-off. No, that's it. No, that's exactly right. That's why I like Al's material, because he said when you're sure, you're 60% sure, and when you're not sure, you're 40% not sure. Whenever probability gets to 70, 80, 90, that means the other person that takes that trade constantly loses. What are they going to do when they look at those trades? They're going to stop doing it. So that edge is going to vanish. If you're taking a setup that has a 10% hit rate, you're going to stop doing that, most likely. So it kind of squeezes in. I think that's, I think he's right. And you can use that in your own trading. If you constantly take reversal bars that are weak in a trend and they lose, then you should do the opposite. Wait for it to fail, buy above. Wait for it to fail, buy above. Oh, no, on ES. Yeah, you're shorting. Yeah, it's, oh, man, I did that for years. Well, I'm pleased we got a swing. You know, there's always a chance you do a stream and you get nothing but losers for 3 hours. I've certainly done those. Felt like everyone else in the room made more points than me. So that's good. That's the tough thing about streaming, or you know, when someone gets up and trades live, you know, it could be the absolute kryptonite market structure for you. Nice, thanks, NB. I did visualize it being an absolute flop. I was like, first trade loss, second trade loss, third trade loss. I was like, okay, just got to wear it, mate. So 3 legs up from the bulls. Bulls really want to get above the high of 1. And I think there's a lot of trading range price action in here. Still no reason to be short, but you can see, I think some bulls scalping out. We got our 2R target, buying above 15. If you took the high 1, so you got 3 consecutive bull bars, measured move up there, or you got the high 1 buy above 20. We came to test it on 23, so similar target. Peter's saying, I hate it when I trade small. I have good hit rates when I trade larger. Yeah, it's just part of it though. It just takes time. That's one of the difficulties with people using prop firms, I think, because it makes you believe you've got this monstrous account. But then when you try and switch to real funds, the emotions are not the same. So you still got to do that transition. I don't have any advice for that one. It just takes a long time. I'd love to hear someone that did it quickly if there was a method for it. And it changes. Some days I would trade and, you know, I was like moving my stop up because I couldn't bear to lose $1. You know what I mean? So it's just like oversensitive to losses. It's a good looking signal bar on 60-minute chart, even though it's an inside bar. It's an inside bull bar in a bull trend, bull micro channel. First reversal attempt, probably minor. So I'm going to try and run it into the 1 high. See if we get it. So we had a gap up and the bears triggered a sell signal, but tail below. Then consecutive bear bars 3, 4. I said that if you sell for your target, which is basically yesterday's close or the last bar of the day, was closer than your risk. So if you put your target there, that means the sell might have to be higher. I didn't take that short, but it made sense if you did, running it into that daily target. So you see how you do that. So if that's the signal to go short, but the risk reward doesn't make sense. So if you put your target there, traders began to sell where it was 1-to-1. 3 legs down to the moving average. Second entry long 15. Reasonable swing entry, good looking entry bar. Bull spike pullback high 1. Reasonable long. Now 3 legs up. Wedge, very common pattern on the open. Highly recommend going through opens of the day and looking for three-legged moves. Here not, trim from the open. Spike, 1, 2, 3. Wedge. Ended up failing, but still a wedge. Spike reversal, no wedge. 1, 2, 3. Was the high of the day for the next few hours. Here, 1, 2, 3. And then a wedge on the way down. 1, 2, kind of 3. Kind of got shortened, so not easy to trade. 1, 2. Up, 1, 2, breakout pullback, similar to today. And then here not, just trend from the open. So you're looking for the wedge, 1, 2, 3. At some point, everything fails. This day was funny because all the bars spent their whole time up the top and then just dropped the last second. That wedge failed and then whoosh go. Three pushes up, sideways to up. Anyway, wedges. So inside bar, high in a trading range. If you're managing a swing, you've probably got a swing stop, 23. Or you're going to get out below a bear bar, or Al says a scalp size below an opposite bar. Or you're just holding to your targets. So to me, 18 and 13 are the same trade. It's a weak reversal fade. This is 3 legs down and it's a spike pullback trade. But there's already been spike pullback, spike pullback. It's the third time we've done it. And so these have a much higher chance of failing. And so that's why I thought buying under 12 was good. But you can use that same concept called a weak reversal fade once you have a strong breakout. 14, 15, 16, 17, bear bar. Is this going to be the reversal for this? And so there's a buy below. Never triggers, and then so as it goes above, it's another buy. It's like another way to get into trades. So I've closed another part at 2R. I'm still holding in small part to go to the high of the day, but so took some off at 8, some off above 8. I should have added back on. That's a mistake. Yeah, because I'm long 2, and then I should have added back on. If you close above 8, add back on the high 1, then you're long here. Anyway, hindsight, it's one to work out after the session. It's all easy when it's not moving. It's all easy when it's hindsight. OX, what caused the hesitation? Just not plugged in, not concentrating. You had the chance about 20, and then you had a second chance as it came back to test this gap. So this thick gap. So here's a shaved bar, 16. So everyone agreed. At this point, bulls and bears all agreed the price needed to be higher. Okay, so now you got a strong momentum leg. Breakout pullback, that's the first breakout pullback after that, and then you've got a gap there. So entering or entering below, trying to catch a pullback for a second leg, high probability trade. So consecutive bear bars, leg 3. You have to exit if you're a bull. You don't have to. Still got a spike and channel look to it. And bears don't have a sell signal yet, so. It's just dumb because I took the aggressive one, but I didn't take the higher probability one. See what the doctor says about gap up and a wedge. Sell off the wedge bottom. That's not quite what we have. Oh, I know why. He calls it a parabolic wedge bottom. So talking about different kinds of wedges. So these are 3 distinct moves, almost 3 little trading ranges. And then a parabolic wedge is, repeated sell climaxes. So spike sideways, spike sideways. So that was more what we had today. And so you see ours got the box on the second reversal up, second reversal up. So parabolic wedges and parabolic wedges on the open. This one formed after the bull leg. So that buy was a scalp and that one was a swing. First good signal triggers, but I think hard to take. Second one also hard to take, but easier for the second signal, I think. Stop below, hoping for a low of the day. We never got to the top of that sell climax. And that's what the bulls are trying to do now, trying to get 3 legs up and then break through. Highly recommend ours encyclopedia. Oh, nice. Still in. That's right. Now, 100's still not a day's range, so the bulls might have sideways and then more up. That would be opening range breakout. Nice. There we go. So these targets up here are if you're a bear and you sold and then you reverse to long, basically where you got out of that short, you're then back to 1-to-1, or if you traded it heavier, then you're back to plus. Oh, you were praying for the targets. Thanks, mate. Appreciate that. It all helps. So you can see that system waiting for a reasonable sell signal. That's an inside bar, so it's not as reliable. If you put your stop, you pulled it up, you wouldn't have got taken out of that trade. So what do the bulls need? So we're in a channel, so they want bull breakout. They want breakout follow through for more up. We had 3 legs down. We've got 3 legs out. So I think the bears will try and keep this as a range, but still just not enough points for an average day. So higher likelihood we break out of it. Strong bull spike yesterday on the 15-minute chart coming into the session. 2 legs sideways and a pause. And then we basically got a second leg from this. Does it have to go up after that? No, there are many days where it just plummets down or goes sideways to down for the rest of the day. But if you have to pick in terms of probabilities, this one is 60%. So generally it's better to take the high probability trade and then follow that system. Unless you're very good at holding for really big rewards. If that's your style, then okay, do the opposite. If you're trading FTSE, we broke out of that range. And then we've got a measured move target a little bit above, 8750. We're at that daily 1R, so we should go up and let those bulls out. I had a target. That's consecutive bull bars there, but I think if you put a stop below 10, probably makes more sense. Your target's up there, so. Where do people get in and out? Interested to hear which bar numbers. I think some traders would either sell below that first or second 15-minute bar. After the second 15-minute bar, you could have sold the close of the first one. You know, so you wait for the breakout and the pullback. That worked out. If you sold below 8, betting that this gap's going to close, not enough bull bars, support's lower. You got a vacuum move down there. Long somewhere between 12 and 15. If you waited for the spike, you could have bought 16 or wait for the pullback, 19, 20, hoping for another leg up. You got a couple of legs up. Bears have not had a good sell signal for a while. So you think about Al's 80% rule. So 80% of reversals fail in trends, 80% of breakouts fail in a trading range. 1, 2, 3, 4. This is probably 4 or 5. So it's got a higher chance of the bears at least getting a scalp. but it's been inside bars, all these bear signals. MSH bought on 16 and above 16 and during 21. Nice. High of the day. Good one. Yeah, so there's not too much, if you find you're taking too many losses in the first few bars, Al says there's usually a good swing, 90, 95% of days. So 80 points above 15. OX, nice, mate. Thanks very much. You set the bar really high. That's the thing with swing trading, is that you're not, it has a low probability, but a good reward. But other times you'll miss the swing and have to try and scalp in that direction. I think the most important point is to not fade the momentum. So if this momentum is down originally, then better wait for it to go sideways before buying. And then the momentum is now up after 15, 16, 17. So don't be in a rush to sell anything. So even if you didn't take a trade in that whole set, as long as you didn't fade the strong moves, I think that's a good practice. Looks like more bulls getting up on 30. Swing stop 27, 28, we'll see. So for example, on ES last night, even if you're not long through here, you don't sell. Okay. You see 12, it's probably a scalp sell above, or you do nothing and say, well, this is a strong spike, it's probably gonna have a second leg, I'm looking for a buy signal. Maybe it's 19, maybe it's 25. So you don't suddenly switch to counter trend. And if you did that, you probably got a piece of that. Open on the day before, so strong spike down. Even if you took a sell and it doesn't work, now you've got strong bull bar and follow through. Now you've got consecutive bull bars again, so stop trying to sell. And if you stop trying to sell, buying somewhere here, here, or here, you probably got part of this move up. So. Al talks about it a lot in the books, and his course talks about always in. Brad actually did a really great presentation in Orlando on it. He talked about always in. He's done just so much work on it. He did a great talk on it. And he has a recording on it on the site. Actually, all the presentations in Orlando were fantastic. I think they're all available on the website. Richard will correct me. So you've got Al's, you've got Ali's, you've got Tim Stout. So Tim Stout did a great prezzo, and Brad and Tom Hugard. So come next time. It's awesome. Elle's saying I wanted to end above 15, but I bought at the 17 high. Okay, so you bought. Okay, so if you wanted to buy 15 and then you're waiting for a pullback and then you see this bar, I think if you're convinced it's going up here and you get that as your entry bar, then you just hit buy the market with a smaller size and you got a wider stop, right? I mean, you could put your stop below 16, but I think it's just better to, if you take a later entry, it should be smaller because the stop's wider. And then, okay, and then you had a trade for 21, because this whole leg, you're trading for a second leg, which you got, and then sideways, and you got out above 21. Okay. So the swing entries earlier at a lower probability, and then the scalp entries later with a higher probability. Okay, because selling here, see if I just broke trading there. No. Okay, because the buy here is not clear. Then we have one more bar. The buy here is still not clear. Okay, but then when we get this is now clear. So the swing's off or the swing's on, but now if you participate, you need a wider stop. My opinion, anyway, many ways to trade, but I think that'll help. Oh, there's a post by Ali on Always Long. Fantastic. Thanks, Zach. That's great. That comes to the end of our stream. Thanks very much for participating in the Euro session. We've got another one on Thursday, and we're just trialing it out to see how we go, see what the vibe is. Please feel free to send a message to Richard and tell him what you thought. Thanks for your participation, enthusiasm, and questions. That's great. And yeah, I hope that was beneficial. Cheers, everyone. Enjoy the rest of the session, and I'll shut down the stream. Awesome. If you're still trading DAX, we're at the high of the day, and we haven't quite done a range. So the question is it going to be opening range breakout expansion there, or is this the top of a trading range? Bears still need to trigger a good sell signal, which they have not. So. Awesome. Thanks, everyone. Take it easy.